Hi, this is Bruce again. So what I wanted to do is on part two here is just go into the math. How does this work? If you're like me, I always like to know the math behind it. I just don't want to know the helicopter version. Really explain to me how do we get these large deductions. So that's what I'm going to do here, because everything's just basically a calculus or algebra formula. All right, so let's look at a cash balance plan math. We're going to use a 55-year-old, 62 age of retirement, because that's what this lifetime maximum balance is based on. So the IRS states that at age 62, the maximum amount you could have in your cash balance plan is $2.8 million. Now you could have multiple cash balance plans if you happen to work for multiple companies and you're able to generate the velocity and income to be able to put this type of money away. But so this is just one company. So we know at 62, we have to calculate how much you need to generate $2.8 million, okay? And we use a bunch of different factors. So the IRS states that at 29 in 2019, right, that the max annual benefit for a defined benefit plan annual payout is $225,000 a year. So that's going to increase basically every year that increases. So at 62, based on let's say 2.5%, okay, we can have a annual benefit payment of $261,000. So that's what we have to shoot for. Okay, so our future benefit payment is going to be $261,000, and I'm just doing this based on my calculation, very preliminary. So that's why we need an actuary to do these calculations for us, so they're correct every year. And it doesn't really cost that much; it's a nominal cost. Okay, but I'm just showing you how this works. So you have current annual income of $350,000, future pension benefits $261,000 based on our assumptions. Okay, we're going to use a rate of return of 4%. Now you could use any type of investment. Life insurance, okay, life insurance is a great investment for pension plans, especially whole life policies with the guaranteed returns as far as dividend income. Then you have the incidental death benefit we'll talk about later, okay? It could be in a variety of different types of investments. It could be in real estate, apartment complexes. So you're not limited to the type of investments you can invest your pension plan money into, okay? So in this scenario, we calculated that this 55-year-old could do $300,000 based on all our factors. The rate of return of 4%, their age, because at 62 in 8 years, that's going to produce at $2.8 million. So that's done. We can't put any more money into the pension plan, okay? And based on a real defined benefit pension plan, if we took out $261,000 a year at $2.8 million, we'd run out of money by the time you're 75 years old at a 4% distribution rate. But at this point, turns into more of you terminate it, you roll it over to your own IRA, then you can do whatever you want with it at that point. But this just shows you right here real quickly why this cash balance plan is so valuable, so powerful, because of this huge deduction you can take, especially the older you are. Okay? Testing. Okay, hi, this is Bruce. We're back. So what I did here, we put together a sample pension plan, taking basically everything we learned from the videos, okay, and combining all these different plans. So we have a company, we have the owner is 55, office manager, 3 salespeople, support person, okay. So we have them in different levels. Owner's level 1, office manager's level 2, and the sales and support's level 3. Okay, that's for the profit sharing plan. Annual incomes 350, 75, 105, 112, 65,000 and 35,000. We have the owner effective tax rate right now at 36%. Okay, so let's look at the profit sharing contribution based on level by using a new comparability profit sharing plan. We're going to contribute 20%, 350 at 70,000, but we're limited to 62,000 with the catch-up provision because they're over 50. Then we can do level 2, we're going to do 8%, so it's 6,000, and 5% for level 3. So their profit sharing plan contributions are right here. So the employer is going to contribute almost $22,000 for his employees into the profit sharing plan. Then we're going to have this 401k safe harbor contribution. We're doing all this stuff for you don't have any discrimination failures on your retirement plan or your pension plan at work. So we're just going to contribute 3% to all the employees to their 401k. Then if they choose to make an elective 401k contribution, that's up to them. Okay. Now we have the pension plan, what we just talked about, Plan 4, maximum contribution to the cash balance plan. We showed you that we can do $300,000 to owner number 1. Since we implemented all these special rules against discrimination, we only have to cover 40% of eligible participants. That's 2.4. So we're going to take 3 employees and do a cash balance plan contribution for them that comes out to $46,000. Okay, it's a lot of money, but let's look at this. So let's say this owner, let's say their spouse works or they have other assets. Let's say they don't even need, this is just example purposes. Let's say they don't even need their annual income of $350,000 a year. Okay, well, if they're being taxed on that, their effective tax rate is 36%, they're going to be paying $126,000 in taxes. So by doing this, we could really knock their effective tax rate down to 20%, let's state. So we're going to save $126,000 in taxes, and they're paying out, what, $79,000 towards their employees' pension contributions between their various plans. So the net tax savings is almost $50,000. So not only is let's really look at this high level. The owner of the company, he came to you stating, hey, listen, I want to pay less taxes. I need to save more money for retirement. Well, you can do that now, okay? $362,000 total employer contribution, okay? And there's going to save a tremendous amount of money at taxes, and we're going to take care of all these problems. So that's in a nutshell how you take all these different types of plans, profit sharing, 401k, cash balance plan, design a plan, put them together to maximize the contributions for the owner, reduce their taxes, okay, and stay away from trouble with the IRS as far as discrimination rules. All right, my name is Bruce Kaufman again. I'm here to help you as a consultant to your company as far as training your salespeople, your staff about these types of pension plans, where they can talk to your current clients about it. You have plenty of clients that don't know about this, and a lot of financial consultants, professionals aren't versed in this, so they can't explain it properly. So that's where I can help you tremendously. So hopefully we'll talk soon, and hopefully this helps out, and have a great day. Okay, bye-bye.